Monday, June 26, 11:26 a.m. New York time. Good morning. Review of the day trade I took with the Zerodte S&P 500 options. Yep, it was a bearish trade I took this morning. I'm already out. Closed it for profits. Took 50%. In hindsight, if I stayed in longer, certainly could have made more money. So we're looking here on the desktop trading platform, Thinkorswim, looking at 6 grids, all the same financial instrument, S&P 500. Big difference is that here on the bottom left, it's the cash index, SPX. All the other ones show the ES. And this is what I traded. I traded options on the S&P 500 equity market. Traded bearish. So top left here is the daily chart. Top middle chart is the 4-hour. Top right is the 1-hour. Bottom left is the 30-minute. The middle, bottom, 15-minute. And the bottom far right, 5 minutes. Okay, the yellow arrow is where I went bearish, short, bear call spreads, and closed my trade at the green arrow. As soon as I got filled, I put my working order on to close 50%. Placed my order to go short, 9:57. And it got closed 10:33. Again, these are 30-minute candles here. Yep, so I was a contrarian. We had this first candle up, green. It was trending green. So again, I was going against the market. And then the reversal came and sold off. Yep. So I closed here. I closed at what, 10:33? So that would have been the next one. Yeah. So 10:33, 9:30, 10, 10:30. So it would have been within the first 3 minutes of this candle, got closed. In hindsight, if I left it open longer, would have had more gains. Could have had losses too, but again, this factually would have had more gains. Again, I'm happy I closed 50% for a scalp, for a day trade. That's a beautiful thing with those Zerodte options. Yeah. Now, if I was scalping the futures contracts at that particular moment, would have had more gains. So let's see what was going on here. Look at the daily chart. I was leaning bearish bias for 2 reasons. Because Friday had that big sell-off, I was thinking maybe we'll have one more panic selling. Then I was looking here at the 4-hour overnight. And overnights, we were still what we did overnight. We were trading more bearish bias. See these 4-hour candles? Yeah, they weren't doing much to close above the 4,400 big round number. So I was leaning more bearish bias. Going in here on the 1-hour. Maybe I should open them up to show you better. The 1-hour, here was the overnight high. And we still, when I put my short on, my bearish trade on, we were still below the overnight low. And you're going to see this momentarily here. This big impulse move up didn't take out that high. Again, the high was after the Asian session. Let me go on the 15 minutes. So on the 15 minutes, here we go, 15-minute chart. Pre-market, when I was looking at it, here was the Asian market, here was the Asian session, London session, and the start of the New York session. So the start of the New York session, down here, again, 8 to 9:30 I have here. I'll extend that out later. I saw this big pump up. Yep, that was the first 5-minute candle. Sorry, first 15-minute candle at 9:30 a.m. open. I was thinking, okay, they're pumping it up. They broke above the London session. And I'm thinking, yep, they're going to try to test the 4,400. And maybe that's where I should go short. Look for bearish trade. Big round number. And I went short, went bearish. Of course, it went higher against me. I took some heat. Didn't use a potty mouth. Crushed my teeth. Ouch, they hurt. And then we had that inside candle, bearish. Also, you'll see it in a minute on the hourly. Here we go on the hourly candle. I labeled midpoint right there, that gray area. You're going to see it now in the 15 minutes. Right there. So as we came back inside of it, broke below. Panic selling came down here. Retest that lows. Let's focus on my trade. So again, I selected a short strike. Again, this is a bear call option. So bear call options, you're shorting one strike, buying the other. The difference is the one you're shorting has a higher premium than the one you're buying. That's a credit spread. Credit spread. Vertical spreads. Vertical spreads. There's two kinds of vertical spreads. There's debit vertical spreads and credit vertical spreads. This was a credit vertical spread, collecting money. The max you can make is what you collect. Got it? And zero DTE simply means the options expire today. The zero means expiring today. And again, my short strike, I selected one that was above the high for the day. Could have been more aggressive. I could have had one that was lower. That would have collected more money. Also put me in more risk. So my plan was, if it went above me, close it before it touches my short strike. But if it goes above the point of entry by a certain dollar amount, to get out of the trade. It never hit that dollar amount, so I didn't have to close it as a loss. Nope. Look at that. Big pump up, that one 30-minute candle. And that's it. Got it. I did have a working order. Sorry, I had a order queued in just in case to go long, because I was thinking, hey, if I'm wrong here, I'll have a ready one to go bullish. I didn't do that one. Thank goodness. Because again, look at the market sold off. So if I did that, I would have already burned probably. My short strike would have been down here. Yep.